Down today, frustrating week, frustrating day. We did not get a good Friday. We've had a choppy 4 out of 5 days. Our equity peak was on Tuesday, and then we've had 3 days of chop. Our equity peak on Tuesday was a bit protracted, I guess ripped off a little bit with the slippage and most of the trend at night, and so we didn't get a huge gain there. And 50K portfolio adjustment from yesterday, these were off. It was minus 2,700 instead of minus 2,100. I've adjusted those on the weekly and on the monthly for today's results as well, and yesterday's correction. And so this is where we are on the day. Minus 725, minus 2,800, minus 5,075 on the week, minus 1,525 on the week, and on the month, minus 256.25 and plus 650. We had more slippage on the 50K portfolio, and so it's underperforming the 200K portfolio. And so let's go over the market and the trades. Yesterday I wrote about the Fed's balance sheet, but I didn't make the video about it. And we were right yesterday on our talking about this support right here at was at 12,000. So the Nasdaq broke 12,000 but closed above it. The S&P never broke 3,900 and closed above it. And I talked about how it will gap down past that support. So much energy has come in to support 3,900 that when there's a gap through there, it typically slices. It doesn't just come right back up to it typically. And you don't typically see bear markets that are this choppy and hardly ever have any strong downtrends. And so we're seeing a bear market where downtrends look like this and the open to close is like this. And so or open to close, the close can be higher than the open with a gap down. And so it's really a challenging downtrend that I've never seen a bear market trade this slowly in a downtrend. And so one of the things we talked about in our yesterday, we didn't make in the video, was the Fed's balance sheet. It went up this week by $6 billion. The Fed has committed to reduce its balance sheet by $95 billion a month. Starting this month, this is the biggest fundamental factor. And, you know, when they come in here and they do this instead, they're just propping the market up. They're keeping it from pricing its natural pricing, and it makes it hard to trade. And so I think we basically have just a dishonest market that can't price because all the liquidity from the Fed is supporting it. And so we could possibly see the FOMC is next Wednesday. We could possibly see a Fed pivot as well on interest rates if they're going to do this with the balance sheet. You know, none of it makes sense to me, and a lot of the price action does not make sense to me right now with the Federal Reserve and what they're doing. A lot of Wall Street is lobbying the Fed, complaining, and so it's an interesting dynamic, the social dynamic to the market related to the Federal Reserve that we've never seen before in history. 14 years of stimulus, and we're at 2.75% right now. And the Fed's balance sheet is, less than 1.5% off its all-time highs of almost $9 trillion. And the market is, the bulls are throwing a fit. And so a healthy economy and a healthy stock market should not need all this stimulus to be prosperous. And so we are interested in the truth here, and this is tough to trade a market that is constantly stimulated and supported by the Federal Reserve. And so that, I didn't mean to rant on that, but it's just a frustrating week. And so let's look at the trades on the day. We are still long 60-minute breakout. We had one loser, one winner, and on our second winner here. So the long side was the most profitable today. The FedEx earnings came out, and the FedEx CEO gave some global recession talk last night in the after hours. The market gap down, and then it just kind of rallies right up to the previous day's close. And so that excess liquidity just wants to buy it, take that excess liquidity away, make it an even market, and we'll see what we have. I think much lower is what we're talking about. And so EVP1 got the rally at the close, and once again rallied at 30 minutes to the close. And so I'm going to exit this 60-minute breakout right before the market closes and try to get back in on Sunday night. This could gap up. We could rally into FOMC. We could start to see the bulls come in and say the Fed's going to pivot. And based on what they're doing with the balance sheet, they're not following through the balance sheet. So who knows what they're going to do? Who could trust what their guidance would be and why they've pivoted in the past? So I don't know. It doesn't make sense, but you have to consider all this liquidity driving the market higher, and after this downward price action, taking out these support levels. Let me scroll back so you can see what I'm talking about. Not on that chart, but we'll do it on this chart right here. We'll be able to see the previous support levels back in June. Hang on. So here's the daily chart of the Nasdaq. So this low was taken out, 12,000, and there'll be a strong desire to support this low right here. And so we could see the market rally with the excess liquidity and the default mindset that the market always goes up. And let's take a look at the rest of the trades. Gap continues 2019, shorted the low, got short, the market just rallied. Short here, gap continuation 2022, tick reversal. It hit equity peaks on Tuesday, stop running on Wednesday, stop running there on Thursday, and then stop running again on Friday. Just a belligerent market the way it's trading right now. Very difficult. There's times when the market feels like it's attacking your positions, and the last few days has certainly felt that way. Got a long trade at the end of the day up, and then tick pulse. This one got short and was stopped out as well twice. Tick wave stopped out, and so it should be possible to short the market in a bear market, and we're just having a tough time shorting the market in a bear market, and it's strange and unusual and kind of a broken market in my opinion. But we still have to find a way to trade it either way, and VTNQ down on the day got short as well. So frustrating day in the Nasdaq. S&P, we had multiple, went short, stopped out, reversed along, stopped out, went short, reversed along, and hit its profit target. So, and then Cobra 3 hit its profit target here, short trade, and so 1 for 2 on the S&P, not as many trades, and then Nasdaq was a challenging trade. Once again, I'm going to exit this trade right before the 5 p.m. Eastern Standard Time close, and then get back in on Sunday night. But those are the trades on the day. Once again, a frustrating day, frustrating week. 2 weeks left in the month, 2 weeks left in the quarter. So this is a drawdown alert as well. Whenever the market is this challenging, then if it's this, you feel this stop running, endless stop running and endless frustration, and you go through that drawdown. That's a drawdown alert. That can be a good time to start. Recommend starting on a drawdown rather than a run up, and so it gives you room to buffer any worst case drawdowns or add contracts. And so drawdown alert, 3 days in a row of losing, and look forward to Monday's trade and a change in tone of the market. I think that a rally could produce, there could be a big rally, just technically speaking, after this week's selling, that could generate some substantial profits on the upside. So we shall see. Have a good weekend, and look forward to Monday's.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.